Hey everyone, so today we're going to be getting into another video lesson on VTL. This is going to be day 2 of its run. As we know, it spiked up from 26 cents to 70 cents per share on Friday. It pulled back to around 40 cents in after hours, and then today it spiked up through 70 cents and went up to 90 cents. So I traded that range. I made around $853, and one of my students, Arthi, she joined TradeBuddy back in September of last year, and she just crossed her first $1,800 day by trading VTL. So we're going to break down VTL, how you could have traded it, all the simple stuff about it. So hopefully you guys enjoy this lesson, and let's get right to it. Alrighty, so here we are on my screen. If you guys have any questions on exactly what platform I use and what scanners I use, I have a FAQ in the description down below, so make sure that you go check that out. But essentially, these charts are E-Trade, and I use Equity Feed and Trade Ideas Pro for my scanners. So first of all, I want to get the trade out of the way, so I just wipe away any skepticism. Here's my trade on VTL. I used 8,000 shares total. Bought 68 and 70 cents. I sold at 77.3. I sold half, and then I took profits along the way, 83, 85, 87. So very nice trade. The top was around 93 cents, so I missed a bit more profit, but can never really know how far it's gonna go. Glad I locked it all in. So yeah, and also I want to show the trade from Arthi, her first $1,800 day. And I love the message that she has at the end. So here it is, 1820 today. Extremely happy. Thanks, Tony Ivanov, Aston, and My Daily Gains for all your knowledge transfer. So I love that ending right there because it just goes to show how much she understands how important it is to have mentors in your trading. It's very hard to learn all the rules, all the intricacies, and everything about trading if you're doing it alone. Of course, it's possible, but either you learn from a mentor who lost money in the market, or you can go solo, but you're gonna have to lose money yourself to learn those valuable lessons. So just wanted to bring that up for you. Once again, I want to give a shout out to Arthi on her amazing day, and looking forward to seeing her break her first $5,000 day. So we'll see when that happens. But of course, the main thing is just being consistent. Of course, the big days are nice, but they're not the goal. You know, the goal is consistency, so let's focus on that. All right, so VTL, this one, we talked about this one on Friday, so make sure that you go back and watch my video lessons from Friday just so you can get the kind of background of what happened on day 1. So after day 1, we knew that, you know, there was major resistance at 70 cents, and overall support was kind of this 46-cent line. So what happened right before market close on Friday is that we had this very last crack down, right? We had this very last crack down. It broke down from 46, hit around 44 cents, but then it quickly recovered. This is a fake breakdown. And essentially what happened is that, you know, traders knew that this line was very important. And essentially what I can pretty much assume from this is that once 46 broke, a ton of long bias traders got stopped out because they had the stop orders there, right? So they stopped out because they believed the stock was going to keep falling, and then it just bounces right back on up, and then it starts to squeeze higher. So this is probably a very large reason why this spike happened, and let me explain why. So you can imagine all the traders who got in around this area of this 46-cent line playing for the breakout. Imagine they got stopped out just to have it squeeze up later on. You can imagine that when this breakout does happen, lots of those people are going to want to jump in because they don't want to miss out on this move. So it stops out the traders here just to force them in at a higher price. So today, I went into the market knowing that VTL was holding this 46 line, and knowing that, you know, if it does break out over 70 cents, it's going to be a very strong breakout. And the reason why I say that is because if we look at the line chart, we can see that we're in this massive, absolutely massive gap fill above around 62 cents. Let's clear off all these lines. You can clearly see that the top of this gap here was 60 cents. So yesterday we were actually, like, we broke the gap fill yesterday, but then we closed underneath it. And then today we got right back into that gap fill and then broke yesterday's high, meaning, you know, the top of this gap is not yet set. And really there's no resistance on this chart whatsoever from like here to $5. There's no resistance. So theoretically, when this does break out, it's going to keep going as long as people are buying. So you have to understand the power of this type of daily chart pattern. So knowing that, I didn't want to get into VTL in the morning because by the time it was morning, it was trading just around the $0.50 range. And if I were to get in here, I have to overall be risking this previous resistance at 46 cents because this could very well, you know, have a pullback down to 46, bounce off that, and then squeeze higher. And I don't want to get into a stock here just to get stopped out like for a tiny bit of a loss, just to have it bounce right up. So that's why I'm very selective on my trades. I really only plan my entries around critical levels of support and resistance. So because I never pulled back to 46, I never got in. So because I never got in at 46, I waited until the next opportunity came. And the next opportunity was the breakout of 70. So I did take a starter position just slightly before it of 2,000 shares on the break over 68 because it just seemed like this was a very bullish pattern. We had very nice volume, so it seemed pretty clear that it was going to break out, but still I want to be safe. I just took a starter position. So I took the starter position and then I waited until we tested that 70-cent line. And once we tested 70 cents, I didn't want to just market order buy after the breakout. I wanted to wait until the breakout happened, and then once the breakout happened, I would put a limit order right on top of 70 cents. I used like 0.7018, and then I would just have my order get filled on that support because I know overall previous resistance should hold as support. So I want to get my orders and my entries as close to that support as possible because then I could risk underneath that support and give it a good amount of wiggle room before getting stopped out. This gives me the highest chance of success. I wait for the right entries and I execute on the correct entries. So after that, it was pretty much a piece of cake after that. So generally the way that I take profits with any trade, as soon as I'm up around 10%, I immediately lock in half my size just to guarantee no matter what, you know, I made a good trade, let me pay myself off. So immediately I locked in half at that 77-cent line. And then after that, I took profits up along the way. As it kept on spiking, I took more profits. And then eventually, once we got this big rejection of 90 cents, I said, okay, that's it. That's it. Enough is enough. Let me get out. Right? So then after that, what do? Are you going to dip buy it at 80 cents? No, that's not a significant resistance. Are you going to dip buy it at 76 cents? No, even though it was a double bottom here, it's not a significant level of resistance. What is the significant level? Well, we know this 70-cent line, right? And we know the idea of previous resistance holding as support. So the only area I want to plan my trade is that same 70-cent line. That's called, you know, using previous resistance as support. And usually the first time it tests is the strongest bounce. So of course, once you go for this bounce, I wouldn't really have the goal of high of day just because we had a massive spike from 52 up to 90. That's probably going to be the main move. After that, just go for that nice easy 10% on those bounces and keep doing it until it doesn't work. Once it doesn't work, of course, then you stop it and you lock up you lock up the account. So it's a very simple way of trading. It's called using previous resistance as new support. I use it all the time and I found an extreme amount of success with it, and so have so many traders within TradeBuddy. Hey, I'm assuming that if you stuck around this late, you must have really enjoyed the content in this video. Well, I'm not done giving you free content. I have an amazing bundle of trading information that I've made over the years. So let's just break it down right now. So first off, it's my ebook, How to Day Trade Every Single Morning. This is the routine that I repeat every single day to find the best stocks to trade. I have the 10 most profitable trade setups of 2019. This is a list of the 10 best setups that I've found and the traders in TradeBuddy have found as well. And then last but not least, my personal trading checklist. So this is what I use every single day to plan all of my trades, plan my entries, plan my exits, and everything in between. So I'm giving away all of this plus a live workshop with me breaking down everything about trading, risk management, capital management, and trader psychology. So you can get all of this for free if you click the link down below that says trading bundle. Sorry about that. Click the link that says trading bundle and you can get registered for the free workshop and get all of this content. All right. Thank you all so much for watching this video. Please make sure that you hit the subscribe button to become a part of the TradeBuddy family, and hope to see you guys in the next video. All right. Thank you so much.